Good morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to start the week with some of our wave counts. Don't forget that you can have all the wave counts that we cover on the Forex, stocks, futures, and more by visiting elliottwavestreet.com/membership. There you can get your 1-month trial and check our live market analysis with videos, with charts, and more. All right, so let's start this week with the euro has been going down. This is a weekly chart, and the price has been going down, but the main plan, according to the wave count, is to find the end of wave B in order to have a leg up back to the previous high. Last week, we have the first signal that this low could be the end of the move, that this low could be the beginning of something like a 1, 2, 3, 4, 5. But we are going to check on the lower time frames what happened, how we traded inside the membership, and what we can expect for this upcoming cycle. All right. So last week I was thinking that this was likely to be the price was likely to be making something like 1, 2, 3, 4, and 5 as a leading diagonal wave, right? That was my plan. So last week on the weekly video we were somewhere here, and I was expecting the price to reverse and make a hard high, right? That was the trading plan, something simple. So this is the trade that I shared with my clients last week. So the plan was to buy, stop the euro at the 115.90 with a stop loss at the 115.60. So we are talking around 30 pips, or exactly 30 pips of a stop loss, and a take profit at the 116.50, right? So 60 points of profit, and we have 30 points of a stop, because this was just a continuation for the move up. I knew that once the price make a hard high, we can either have a retrace or whatever. But the expected was different, actually. Well, the trade worked fantastic. Here I triggered at the first signal. Then we have to wait because the market was really choppy, but no problem. The stop loss was here, so no problem. The entry was here at the 90, right? So no problem there, and the trade worked fantastic for last week. But then the price, well, the expected, when we are expecting a wave 2, when we have 1, 2, 3, 4, 5 can be leading diagonal wave, no problem, and then we expect the wave 2. That wave 2 should be shallow, like this one here. Should be sideways, should be slow, right? But in this case, we were seeing on the euro a big sell-off. This is a withdrawal of liquidity from the institutions, and that's not the plan during a wave 2. Clearly is not the plan during the wave 2. This was supposed to be something like this, not at that speed. So this withdrawal of liquidity is telling that the market, first of all, needs to move lower, right, to capture all this liquidity here this week. We're going to talk about this day trade in a second. And because we're so close to the low, I decided to make this leg up corrective and expect a lower low. But the good news, I'm really happy with this scenario, because if price is able to make the low and reverse, that's gonna be the entry right there. So that's gonna be simple, finding the bottom of the market or the market lows. we will need to see the price crossing, then reversing, and that's it. It's showing a little bit of demand will be enough to find a beautiful trade. So let's wait for that leg down. In the meantime, we can have a nice day trade by finding the end of this wave B on a lower time frame. So let's do it. Let's create that plan. This is going to be a little trade just to follow the momentum down. A price might retest this area of the 83.85, but let's go to the hourly chart. All right, so on the hourly chart on the live market, we're seeing wave B active. Wave B can retrace 50% of the previous move, can retrace 61.8%, right? So it's not about the retrace, it's about finding where wave B is going to be done, where wave B is going to finish. So in order to perform this trade, to find out this trade, we already know that we are in a 3-wave sequence, right? So here we have the 3-wave sequence. We have the internals 1, 2, 3, 4, 5, ending diagonal wave. Fantastic. So we can start drilling down to the 15-minute chart, first of all. Then we will go to the 5-minute chart in order to find the trade. Look. So if this is wave 1, if this is wave 2, if this is wave 3, if this is wave 4, if this is wave 5, we are seeing the rejection at the highs. I would like to see on the 15-minute chart a close below this high, this wave 3. A candle closing below this area, just to have the validation. But clearly here, or in the 5-minute chart, we are having a high probability setup in order to find our sell trade, because to me this is the top. To me this is the market top. We are seeing the completion of the accumulation of the distribution, and this could be the beginning of something nice. But we should wait for the validation on the 15-minute chart, or at least here to have a nice red candle. I prefer the 15-minute chart to have that validation, but clearly we are in a distribution process on the euro. So it's a matter of patience. Having a 10 to 20 pip stop loss here is a day trade, and the target would be at the previous low. Could be interesting. So that's what I'm planning to do today during the session. Is not the main trade, it's just a little day trade. My main trade again is on the higher time frames, finding the bottom of this market in order to go long and capture 900 points, 800 points, something like that. That's going to be the plan. Let's have a look at another one. Let's have a look at the dollar CAD. On the dollar CAD, I'm long from a while ago. I was able to trigger my trade at the 123.15, right? And price went to the 124.30, 115 pips. And I didn't book my profits. I still have half of my trade active. So the plan that I'm having is either to have the price testing this area, and I will add to the position, or if the price makes the low, it doesn't matter. I already booked partial profits on my position, so if it takes me out, I don't have a problem with that, because I'm gonna trigger again at these lows. Finding the bottom of the market. Good news is that we are already seeing some nice demand on the dollar CAD, so that's interesting. Let's have a look at the S&P. Has been working fantastic. The S&P, last week we were talking about the possibility of seeing the S&P crossing the 4600. Wow, that is fantastic. I'm long on the S&P since this area. Actually, I have a nice tweet in Twitter where I was talking about this, and you also see this in the live market analysis. When we were down here And if you are a member, you also see the whole analysis here. It was fantastic. But let me show you that tweet. That was great. I posted that tweet on October the 13th. Let me bring it up. Right, here we go. So this was, I posted this tweet on October 13th. I show here my entries on the hourly chart on the S&P. And look how fantastic this S&P has been doing. This was my best. This one with natural gas was my best trade during the month of October. Wow, big money here. Look where we are now, and that entry was here. Precise entries. Now the S&P is a little bit expensive. I'm not sure if it's a good idea to go long when the market is so expensive, you know, where the institutions are starting to book some profits, so we have to be careful. But if we really want to add to the position, because I don't think that it's a fresh trade anymore, it would be by waiting for a discount. So the discount should be something like ABC. Let me change my tool here. Something like ABC. And I think we could visit the 610 in the index. It's going to be a little bit lower on the ES. And maybe this area, the 600. So if it bounces from here, it's a trade. If it bounces from here, it's a trade. But if we start seeing some red candles going down here, is the lowest probability, because I think this is just a retrace to continue higher. But let's say that we have some big candles returning to this area, is not going to be a good plan to buy it anymore. Only we have rejections, absorptions at these areas. All right, traders, so that's the plan for this week. If you would like to find to receive better our great analysis, live market analysis every day, with trading plans, with charts, with videos, you can visit us at on ElliottWaveStreet.com. Then click on the membership tab, where you are finding the plans that we have on the Forex, stocks, or the full access. These are the instruments that we cover on a daily basis. So you can check all the details here. We also have the new Members Academy that is fantastic, because now the Elliott Wave Crash Course is complete with all the basics that you need to know to understand the Elliott Wave theory, with risk strategies, with tactics, and I'm going to continue adding more lessons. All right, traders, it's a fantastic start of this month. We are now in November. Let's make this November a fantastic month. Please have a great start of your month, of your week. I wish you the best. I'll see you inside the membership. Take care. Bye-bye.